Thank you all for being here today. It's a real pleasure to present at our second Resources Rising Stars in the Gold Coast and see a lot of familiar faces and repeat investors from last year. Tom, our exploration manager, and myself are next in the booth next door near the coffee cart, so please feel free to drop by. We've got some rocks on the table if you want to have a look at visible gold, some high-grade silver as well, and talk through our projects. We're based in New South Wales, exploring for world-class deposits, so looking for large tonnage systems. Just touching on the investment highlights, that resource that was mentioned equates to around 1.2 million ounces gold equivalent, so that's mostly gold and silver that make up the majority of that, and that really underpins a valuation in the company. We've got a lot of high-impact news flow coming through upcoming drill campaigns on both our 100% owned projects as well as joint venture partnerships. We're exploring for gold, silver and copper in the world-class jurisdiction of New South Wales, so home to Australia's largest gold mine, and emerging discovery success being constantly seen throughout that region. We're a little bit different to a lot of other companies that you might run into, and we've got this strong partnership model. Across our 10 projects in the portfolio, we've got 5 joint ventures, including with companies like Newmont, S2 Resources led by Dr. Mark Bennett, and they really give our shareholders this optionality, this non-dilutive exposure to discovery success, in addition to our 100% owned projects, including Mount Carrington and the Thompson Resources. Importantly for shareholders as well, we've got a low amount of shares on issue. We're fully funded from a recent $7.5 million raise. So we really are probably in the best position that the company has been in since our IPO in 2021. That's just a brief corporate snapshot. I'll probably just sort of highlight maybe 2 key members of the board. Dr. David Carland, ex-chairman of Rex Minerals, fantastic sort of tenure with that development story down in South Australia, leading that to an eventual sort of acquisition by an overseas entity. And then a recent addition, Dr. John Greenfield. We're a very technical focused exploration team. Dr. Greenfield joins us from Newmont, where he was the principal exploration geologist. He was also the head of the Geological Survey of New South Wales. So we're really sort of cementing ourselves as New South Wales focused. We're the largest exploration company in New South Wales, with a significant sort of exposure to these, high-grade gold, silver and copper systems. So on to Mount Carrington. Mount Carrington we see is a phenomenal project to have in the portfolio, and it's rare to sort of see such a high-grade system with so limited historical testing. The focus on this project in the past has always revolved around really small-scale mining. We've sort of thrown that out, and we're looking at the big picture here, and what we see is quite massive. So the sort of resource size and the prize are these large Pacific Rim type systems, and I'll talk a bit about K-Now2 and their sort of growth story. We've got 1.2 million ounces gold equivalent. When we acquired that project, it had around 700,000 ounces gold equivalent. So without sinking a single drill hole, we immediately saw that the resource was underdone, and we were able to double that. So we released our first MRE early this year, followed by 2 months later a scoping study, and we'll have another scoping study on track for delivery by the end of the year. In addition to that sort of advanced development opportunity, we really see the exploration upside as a real driver for value for our shareholders on the project. A good indicator when you're looking at these types of epithermal porphyry systems for their fertility and how big they can be is these 100-gram metre gold hits. We estimate there's probably about 100 plus across the Mount Carrington project, with such results including 12 metres at 48 grams, gold, 2,500 silver, some fantastic copper hits, 18 or close to 19 metres at 5.8% copper, and further down hole 10 at 7. And you'll see just how shallow those are, from 16 metres, from 2 metres, from 58 metres. That's what some of the MREs look like. It's a combination of these large open pits, 34 million tonnes, and that's really developed off the near-surface resource. What we find quite exciting about these types of systems is the underground potential that you see. Normally, these high-grade epithermal systems are underground mines. What we're looking at, Drake, is such an extensive mineralisation at surface that it actually makes it economic to look at these open pit mining methods. We haven't yet started to get into what that underground growth potential looks like, but we think it can be pretty massive. Importantly as well, it sits in a brownfield site. actively logged in the region where we're at. And again, a lot of those sort of key critical infrastructure, sunk capital costs already exist on the project. I won't talk too much about the phase 1 scoping study that we did. The purpose of that was really just to sort of demonstrate, the great, fundamentals that exist on that project. So NPV of close to 400 million at an Aussie gold price of 5,000 ounces. Importantly, we've engaged Ausenco to look at a metallurgical review of that project, and that'll really feed into this stage 2 study. If stage 1, based on 17% of the existing MRE, delivered an NPV of close to 400 million. We're pretty excited to sort of incorporate, almost 4 times that into the stage 2 scoping study. So we're going to expect to see significant uplift in that NPV. So that stage 1 looked at 200,000 ounces of gold only. We're going to include the full 700,000 ounces of gold and 23 million ounces of silver into that stage 2 assessment. To sort of step back from those, that resource, and again, looking at this big picture, is this large system. So we're looking at a caldera structure that's about 17 kilometres in sort of size. So you're talking about one of the largest mineralised systems within New South Wales. This new technology that we're applying to this project, they've been mining at Drake since about 1853, so it's one of the longest mined jurisdictions in Australia. We're applying new technology to it. This airborne MT that's been used very successfully in PNG at deposit site K92, what it's identifying and highlighting to us is this potential depth continuity to the existing deposits and structures. So that Mount Carrington group there, Kylo, Strauss, Lady Hampton, 770,000 ounces gold equivalent, that MRE sits within 100 metres. The depth on that conductivity, resistivity features is down to sort of 2 kilometres. So they present these compelling drill targets, which we've got government approval, and we're imminently drilling on that, looking at Battery, Emu and Mascot as our key sort of targets. So we're combining near mine brownfields exploration as well as looking at greenfields discovery opportunities in the region. So 4,500 metres of drilling planned initially at Battery. That'll involve diamond drilling. So when we sort of look at these deep, structures, what they look like, these fluid pathways that have deposited, the significant amount of gold and silver at surface, you have to look at where they come from. And I mentioned K92, phenomenal growth story, acquired from Barrick back in 2015 when they divested out of Australasia. That deposit started off at 0.8 million ounces gold equivalent. So we're in that same epithermal porphyry environment that they're in. 2017, that had grown to 2.2 million. Currently, in 2025, that's actually 22 million ounces. So it grows substantially, and that's come from a combination of drilling deeper as well as regional exploration discoveries. Looking at that bottom image there, I've put a 49 metre depth profile. That's the average drill depth across the Drake project. There's an extensive amount of drilling, totalling 160,000 metres, only averaging 49 metres. So we're looking at these types of systems that have vertical zonations for hundreds of metres, and this is the real upside. If you can talk about if every 100 metres of the Mount Carrington project can deliver 1.2 million ounces, what's the 100 to 200 metre zone going to deliver? What's the 2 to 300? Whereas in the case of K92, they're at the kilometre sort of depth. That's the sort of growth trajectory that you see in these epithermal porphyry systems. This is a little bit more technical, but I put it up so that the geologists out there can sort of see just again the very close textural comparisons between the two styles of systems. We're looking at high grades of gold, high grades of silver, high grades of copper. We've also done a lot of work at Drake, reprocessing a lot of the historical data there, and that sort of really demonstrates very, very clearly what the targets are and I guess the historical exploration approach. All those little drill traces you see there, they're all centred on the existing open pits. But as soon as you step back, look at that bigger picture, and you can see these large conductivity features that remain untested as potentially driving those systems. That gets us really excited. We're not the first company to think about it. Another company did attempt to drill it, and that hole was drilled back in 2015, and that's the hole that we can see, WCDD003 on the right. Unfortunately for them, they didn't model the raw data, and they actually drilled coincident or right next to that large anomaly. So sort of got 800 metres of anomalous results, but didn't actually hit the target zone. So I'll talk about Thomson as our other key 100% owned project. We're quite excited about Thomson, out of the epithermal porphyry space into the intrusion-related gold system. So we're looking, again, with a new concept, big system thinking up here. It's a 5,500 square kilometre tenement, so this is a district scale play. Early mover advantage, and we're really seeing some quite encouraging results coming from the targets that we've been drilling. There's a lot of them. There's about 24 of these discrete magnetic bullseye and coincident gravity anomalies that we're currently got approvals to drill. And to give some sort of perspective on the scale of the system we're looking for out there as an intrusion-related gold and copper system, this is just to scale comparison with the Hemi system project. So Hemi, obviously well known for the recent discovery out there. We're looking at a very, very large system that we control out at the Thomson. And what gives us a lot of encouragement, to the potential that these types of systems can host a deposit such as Hemi, Winu, Havieron, even sort of Telfer, is the fact that we're seeing broad zones of mineralisation, we're seeing gold, so we know these systems are fertile. That's only ever been drilled by really one other company, and that was about a decade ago. They were looking for a different style of deposit and targeting the magnetic features. Often in these retrusion-related gold and copper stories, you need to target the gravity features as part of those anomalies, and that's a key part of progressing, advancing that project. So some great drill targets as well out there that we're funded to under our recent raise to start to tackle. When we look at that last exploration effort back in 2011, they realised that they were into an intrusion-related system, but really couldn't get the funding, and there wasn't a lot of, understanding of these types of systems in the market. If you fast forward from 2011 to 2025, the combination of Winu, Havieron, Hemi, you're talking close to 30 million ounces gold equivalent that's been discovered in this type of, relatively new geological concept of intrusion-related, reduced intrusion-related systems. So I'll just briefly talk about our joint venture projects. As I said, we've got a lot of drilling going on, but what we really like about these joint venture projects is the phenomenal optionality it provides within our portfolio. Non-dilutive exposure for shareholders, so that's getting other companies to fund the money, share the risk, share the expertise. We've had a great partnership with Newmont, with S2 Resources, and the expertise that both those teams deliver. And this is what the sort of returns that you can get through a discovery made in a joint venture. So, throw out the ideas that joint ventures, you don't get any, value for money. Look at Greatland Gold. You're talking more than a 10-bagger based on a 25% JV they have with Newcrest on the Havieron project. I think their market cap now is is close to 3 billion Aussie, so significant in terms of what a discovery can mean in a joint venture part of a company's portfolio. So we're really positioned for growth and discovery success with that funding. We've got lots of drilling coming up towards the end of the year, and we really plan to sort of continuously drill at the Mount Carrington project, starting off with Battery, Mascot, Emu, and then rolling through the series of targets across the projects. And again, just summing up those investment highlights, 1.2 million ounces under the belt already. We're exploring for these world-class deposits, so that 1.2 million ounces, we see that as very likely to be an order of magnitude higher. Low, tight capital structure, well-funded, again with this high-impact drilling and these 100% owned projects and JV optionality. So with that, I'd like to thank you all for your time and enjoy the rest of the conference.